Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon is Chris Dearborn, Managing Director with Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Chris, while the index has been one of the better performers over the past decade and a half, certainly under some pressure along with the other indexes as we start what's been a volatile January.
Absolutely. The NDX has given back the last 11 months of gains in only 3 weeks. And it's been kind of dramatic the way it's been moving here. There's been a number of different macro factors that people have been talking about, and they're all very real, right? Inflation is the main driver here and concerns, but there's also a lot of macro pressures on top of that. You know, you had COVID issues at the beginning with the Omicron variant at the end of December into January that put some doubt into a market recovery. And then more importantly, you've got some areas of conflict, including what's going on in Ukraine right now. So when there's times of stress, people like to go to cash. And you can see that reflecting in the 10-year, though it's not running as hot as it was last week.
Right. And Chris, if we take a look at your first chart here, what are some of the fresh technical levels that you're watching as, you know, even since last Monday when we met, they have definitely reset themselves.
Absolutely. Right. So the Nasdaq-100 is having its second worst January on record. The worst was in 2008. And the first week of 2002, the NDX broke its clearly defined rising trend line. And most importantly, its 200-day moving average. The 200-day moving average is signified on the yellow on the chart. And if you see that, we broke that at the end of last week. That's a major long-term support area. And the index is gapped lower on Friday and again today. So we're looking at significant support in the index at 13,950 and then lower at 12,950. Ideally, the index opened at 14,160 today, 14,160. And we need to see that index close at or above that opening high to turn this candle slightly green to give it a bullish momentum to try to regain that gap. Now, if you look at the bottom of the chart, the relative strength index, which we talk about on all the time, oversold, overbought conditions. Most of the conversations we had last year were in overbought conditions, which are 70 or above. We are trading at a 24 handle right now, which is oversold territory. Friday was oversold as well. Generally, you see these overbought or oversold scenarios play out over 3 to 7 trading days before they rebound significantly one direction or the other. So we're looking for a little bit more downward pressure in the very near term. Look for the 13,950 to hold. Resistance on the upside is tight at 14,400 and 14,800.
And Chris, if we take a look at your last chart here, we can see the different sectors, the stocks that are lending to performance, well, perhaps underperformance in the Nasdaq-100. Is there any area where you're seeing a little bit of green or relative outperformance?
There are. So when you have headwinds into inflation and you have concerns about rising rate environment, which we're looking at right now, the Fed fund futures are pricing in anywhere from 3 to 5 rate hikes this year alone. That's going to give investors who follow tech and non-profitable companies headwind into buying the stock. And that's why I think you're seeing a lot of the buyers walk away from stocks at the moment and the selling being a little bit oversold, hence the low RSI at the 24, 23 handle. This morning, when I looked at this chart, there were only 10 Nasdaq 100 names that were positive. Now we're closer to 30. Granted, the larger names are down significantly, as you'd expect. Amazon, Nvidia, Microsoft, Tesla, Apple. But on the flip side, you got strength. T-Mobile's up, Qualcomm, Team, Starbucks, Orly's, Dollar Tree, consumer names. Consumer names are where people are flooding to. Financial names are where people are flooding to right now. Energy as well, but there's not much energy in the Nasdaq 100. And financials obviously are not in this index as well. So the only real strength here is the consumer names.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.